I was scrolling through a social media thread yesterday, and I saw something that just perfectly captured this strange moment we're in.
Oh, yeah.
Yeah, this user, Mr. Zhang, was explaining why he just canceled his family vacation to Tokyo. And he was so serious about it.
Right, echoing the official line.
Word for word, all about security risks and how, no normal citizen should support a country causing trouble. The airport departure board was suddenly a moral danger zone for him.
But that's not the whole story, is it?
Not even close. I looked at the replies, and the whole mood just did this jarring, almost comedic 180. Travelers from Taiwan, Hong Kong, even Canada were tagging their friends. Totally giddy. They were
celebrating the warning.
Exactly. One comment was like, "Japan without the crowds, that's practically heaven. I'm booking my ticket now." Another one sarcastically thanked the motherland for clearing the queues at Tokyo Disneyland.
That is a surreal disconnect.
It is. On one side, you have this diplomatic firestorm wiping billions off the stock market, and on the other, you have people treating a government warning as the ultimate travel tip. It really makes you wonder, in trying to punish Japan, has Beijing just accidentally rebranded it as an exclusive destination?
That gap in perception, it's just incredible, and it really sets the stage perfectly for this deep dive.
It really does.
Because our mission today is to unpack how this whole diplomatic firestorm is being weaponized, economically. It's exposing these deep vulnerabilities, but it's also forcing some really strategic and, frankly, surprisingly swift shifts across the whole region. This is so much bigger than just tourism.
So let's start with the spark. We need to go back to early November 2025. What did the Japanese Prime Minister, Sanai Takaichi, actually say that lit the fuse?
Okay, so the key moment was November 7th. Prime Minister Takaichi is in Parliament, and she says that a Chinese military attack on Taiwan could be a survival-threatening situation for Japan.
And that phrase, that's not just rhetoric, is it? It has a specific meaning.
It has a profound legal meaning. That exact phrase, survival-threatening situation, is the legal threshold that could potentially allow Japan to use its military under its collective self-defense laws.
Wow. That's a huge step. I mean, Japan's post-war constitution has kept its military, the self-defense forces, so limited.
For decades, this idea of collective self-defense is still a really new and contentious concept there.
So linking Taiwan to that specific legal phrase, what signal does that send?
It's a massive shift from strategic ambiguity to, strategic clarity. Before, Tokyo might say they'd monitor the situation. Now they've basically drawn a legal red line.
Beijing's reaction?
Immediate. They demanded a retraction and warned of stern and resolute countermeasures. And the rhetoric, it escalated fast.
How fast are we talking?
The official military channels got involved. The PLA Daily, that's the Voice of the People's Liberation Army, ran commentary suggesting Japanese involvement could turn the entire country into a battlefield.
When the military starts talking like that, it's clearly more than a diplomatic spat.
Absolutely. It signals that China sees this as a critical national security issue.
Okay, so with the rhetoric at that level, what was the first economic weapon they reached for?
The most efficient one they have, the travel advisory. That was the immediate first strike.
Urging citizens to avoid Japan due to security risks.
And crucially, it wasn't just Beijing. Hong Kong and Macau issued parallel advisories almost instantly.
Which proves it was a coordinated campaign.
A coordinated campaign designed to inflict real economic pain without passing a single formal trade law.
And it's so effective because it's not just a government order, right? They make it incredibly easy for people to comply. I'm thinking of that story about the traveler Chen, who canceled her honeymoon to Hokkaido.
Exactly. The unpacked suitcase. That's the perfect illustration. State-linked airlines like Air China immediately offered full, friction-free refunds for any Japan flights.
So they removed the financial penalty.
Right. And then the social pressure does the rest. Your friends, your family, they're all talking about the security risks. The path of least resistance is just to cancel.
And Chen redirected her holiday spending to a domestic trip instead.
Which is the genius of it. You weaponize the middle class's spending power, redirect it inward, and give your own economy a little stimulus while punishing your rival.
It is brutally effective. So let's quantify that punishment. Just how vulnerable was Japan's service sector to this?
The reliance was critical. Chinese tourists were making up somewhere between 24 and 27% of Japan's total inbound consumption.
That's a huge chunk.
It's roughly 2.1 trillion yen in just the third quarter of 2025. So the immediate threat is immense. Analysts estimate a potential monthly loss of nearly 200 billion yen.
which is about 1.3 billion US dollars.
If those arrivals drop to zero.
And where does that $1.3 billion hit land the hardest? It's not spread out evenly, I assume.
Not at all. It's highly concentrated. Think luxury retail, drugstores that focus on duty-free sales in places like Ginza, Shinjuku, Osaka.
Big tour group destinations.
Exactly. A lot of those shops are built on a high-volume model. When those tour groups just evaporate, the immediate effect on that specific retail ecosystem is devastating.
And you could see that panic reflected in the stock market almost instantly.
Oh, absolutely. The market shockwaves were severe. You look at a cosmetics giant like Shiseido, its shares dropped over not even 11%.
Why them in particular?
Because they've marketed so heavily to high-spending Chinese consumers, both in Japan and back in mainland China. So a travel advisory means lost foot traffic, sure, but it also signals the risk of a much wider consumer boycott.
Right, and it wasn't just them.
No. Department stores like Isetan Mitsukoshi fell 11%, Takashimaya over 5%, and it even hits brands with a big presence in China, like Uniqlo's parent company, Fast Retailing.
That is a brutal short-term hit, especially with Japan's economy already contracting in the previous quarter. What's the risk to the wider economy?
The macro impact could be very significant. If Chinese tourism completely collapses, some analysts are warning Japan's GDP could shrink by about 0.5%.
So it's adding this severe, and you could say totally avoidable, pressure when the economy really needs stability.
It's a painful reminder, isn't it, that even a really advanced economy is vulnerable when a critical market segment can be weaponized so suddenly.
Okay, so that's the short-term pain. But as you said earlier, this is also forcing some strategic shifts. It seems like Japan isn't just taking the hit, it's actually accelerating a pivot.
That's the really compelling counter-narrative here. Japan is strategically moving away from that reliance on high-volume group tour models.
The ones linked mainly to mainland China.
Right. And they're moving toward a model that's focused on high-value, diversified visitor streams. They're using this crisis to force the pace of that change.
You can even see it on the ground. I was reading about a small matcha shop owner in Kyoto, a guy named Kenji.
Ah, yes, his story is the perfect example.
His whole business model was about chaotic tour groups buying stuff in bulk. The buses are gone, so now he's completely reinventing his shop.
Kenji's pivot is exactly what this new strategy looks like. He's redecorating, focusing on what they call the slow travel demographic.
So domestic Japanese tourists, Europeans, Americans.
People who spend more time, want more authenticity, and critically, spend more per trip. He's deliberately trading volume for value.
Building a business that can survive when one geopolitical stream just freezes up. And this isn't just a few anecdotes, is it? The data backs this up.
The data strongly supports it. In the second quarter of 2024, per capita spending by overseas tourists went up to 239,000 yen.
That's an increase of over 50% from 2019 levels.
It's huge, and Japan is actually leading the whole APAC tourism recovery. But, and this is the key insight, that recovery is being driven overwhelmingly by non-Chinese visitors.
So South Korea, Taiwan, Western markets.
Exactly.
This has to be changing the entire face of urban retail corridors then.
It absolutely is. You look at a place like Ginza. The main tenants are shifting away from those massive duty-free shops and drugstores that catered to mass tourism.
And they're being replaced by
high-value, high-margin businesses. Luxury brands, exclusive jewelers, high-end watches, even the secondhand luxury market. The whole ecosystem is adapting to a traveler who wants enduring value, not just a tax-free bargain.
So while the service sector is going through this really painful adjustment, the longer-term trend is toward a more resilient model. But let's pivot, because the deeper threat here isn't just about tourism, is it?
That is the critical risk that the markets are really pricing in now. The real fear is that this diplomatic friction escalates into a full-blown trade dispute.
One that targets Japan's industrial backbone.
It's crucial manufacturing inputs.
I read about an industry manager, a Mr. Tanaka, at an automotive electronics supplier. He wasn't worried about department store stocks. He was worried about the supply line for neodymium magnets. Why is that specific component the flashpoint?
Mr. Tanaka's anxiety is all rooted in history. Neodymium magnets are absolutely critical for high-tech manufacturing.
We're talking electric vehicle motors, wind turbines.
Advanced electronics, yes. And Japan relies on China for over half of its rare earth elements, which you need to make these magnets. So if Beijing restricts those exports, what's sometimes called the rare earth chokehold, It could cripple Japan's entire auto sector.
And this isn't just a hypothetical threat. We've seen China use this playbook before.
It's their familiar playbook for economic coercion. You just have to look back to 2010. They restricted rare earth exports to Japan over a dispute about the Senkaku Islands.
And more recently against South Korea, right?
Yeah.
With the THAAD missile system.
That's right, back in 2017.
Can you just quickly remind us what happened there?
Sure. THAAD is a U.S. missile defense system. It was deployed in South Korea, and Beijing saw it as a strategic threat.
And their response wasn't military.
It was economic. Boycotts of Korean goods, halting Chinese tourism. The whole campaign ended up knocking a measurable 0.4 percentage points off South Korea's GDP that year. It proves these actions have real, quantifiable costs.
So the weapon is targeted and very effective. Where else is Beijing applying pressure now, beyond the rare earth threat?
You can see the net widening in a few surgical strikes. Take seafood. China signaled a ban on all Japanese seafood imports.
That's a big deal. China was their top buyer for things like scallops.
Their top international buyer. So that's a targeted attack on a key export sector. And we're also seeing it hit cultural and academic ties.
How so?
Academic meetings postponed, friendship events canceled, Japanese film releases in China put on hold indefinitely. It's an all-of-society application of pressure.
So how are investors reacting to all this? This has to be changing the entire perception of risk in Asia.
The financial markets are definitely embedding a wider geopolitical risk premium. Volatility for the Japanese yen is likely to go up as trade stability is questioned.
Investors are rotating out of certain sectors.
A very clear sector rotation. They're selling tourism-linked stocks and shifting capital into assets that are seen as more resilient to these kinds of shocks.
And what are those assets? Where's the safe money going?
We're seeing a lot of capital reallocated into defense industries, energy, and commodities.
Commodities, why?
Because if China restricts something like rare earths, the price of the remaining non-Chinese supply is going to surge. For instance, commodities ETFs in Japan saw over $277 million in inflows in just 1 month.
So they're hedging against resource restriction.
Exactly. And at the same time, you're seeing optimism around broad Japanese market ETFs driven by things like corporate reforms and strong domestic demand, basically anything to insulate portfolios from these external shocks.
And this all feeds into that longer-term trend we've talked about before, the whole de-risking of global supply chains.
Precisely. Japanese firms are accelerating their de-risking and friendshoring initiatives. It means they're prioritizing supply chain resilience over pure cost efficiency.
And that's benefiting other countries in the region.
It's directly benefiting the ASEAN nations. Countries like the Philippines, Vietnam, Indonesia, they're attracting huge foreign direct investment as Japanese manufacturers look for less volatile alternatives to North Asian trade. You know, if we synthesize this whole picture of this crisis, it isn't just a political spat or a simple economic downturn. It's a really meaningful, high-stakes reset of Asia's entire geopolitical risk premium.
A reset.
Yeah. It confirms that for both of these powers, national security objectives are now the clear priority, even if that comes at the expense of economic interdependence.
So the cost of Japan's diplomatic clarity on Taiwan is being measured in real yen, in stock market drops, canceled honeymoons. But at the same time, the country is managing that pain while accelerating these vital long-term strategies for diversification and resilience. This whole episode is forcing the creation of a more fragmented global economy, one where supply chains are being designed for political security first,
Yeah.
even if that means losing the efficiencies we all got so used to.